Welcome to the Invested Dads Podcast, simplifying financial topics so that you can take action and make your financial situation better. Helping you to understand the current world of financial planning and investments, here are your hosts, Josh Robb and Austin Wilson.
All right. Hey. Welcome back to the Invested Dads Podcast, a podcast where we take you on a journey to better your financial future. I am Austin Wilson, a research analyst at Hixon Zuercher Capital Management.
And I'm Josh Robb, Director of Wealth Management at Hixon Zuercher Capital Management. Austin, how can people help us grow our podcast?
Well, we would love to grow this podcast, and we can do that if you would subscribe if you're not subscribed. Every single podcast player you're listening to, whether that's a little plus button, a follow button, or whatever that is, you can follow us, you can subscribe. That way you get new episodes every single Thursday. We would love it if you would do that. And we would love it if you would visit our website and sign up for our weekly newsletter to get notified each and every Thursday when our episode drops, with a link to listen to it, as well as some high-level show notes or some a summary of what we're going to be talking about in that episode. So, today,
Yes.
Are you excited as I am for this?
We're going to talk about IRAs.
We're going to talk about IRAs. I mean, we've never talked about them before. Are we talking about Roth or traditional?
I don't know. You tell me.
Well, nope. We're actually going to be talking about IRAs, but we're going to be talking about the recently passed Inflation Reduction Act of 2022, also known as the IRA. You'd think you'd come up with a new,
come on, people.
Come up with a new acronym, because I feel like we've talked about this before, but taxpayer dollars, hard at work. Someone's job is to come up with acronyms for bills.
Right, and that's going to be my second career, by the way.
You love good tickers and you love good acronyms. This was not a good one.
This is not. So it's a good one. It's
already been used. Yeah, exactly. It was good the first time.
And if this dealt with IRA issues, I would be okay with them using that.
Exactly.
It does not.
It's not even in the ballpark. So, Josh,
yes.
The background of the Inflation Reduction Act really goes back to the Build Back Better plan. So this was a legislative framework proposed by United States President Joe Biden between 2020 and 2021. It was viewed as a pretty ambitious bill in general, in terms of both size and scope. It was enormous. So it sought to make the largest nationwide public investments in social, infrastructural, and environmental programs since all the way back in the 30s with the Great Depression fighting policies of the New Deal. That's kind of where it gets its roots, those sort of thinking there. The plan was actually divided into three parts. So one of them was the American Rescue Plan, which was a COVID-19 relief spending bill that was signed into law in March of 2021. The two other parts, those were reworked into different bills over the course of extensive negotiations within and among congressional entities. Part one being the American Jobs Plan. That was a proposal to address long-neglected infrastructure needs and reduce America's contributions to climate change's destructive effects. And then there was the American Families Plan, which was a proposal to fund a variety of social policy initiatives, such as paid family leave and things like that had never been enacted nationally in the U.S. The Build Back Better Act, that was a bill introduced in the 117th Congress to fulfill aspects of the Build Back Better plan. So ACT was part of the plan.
Oh, boy.
Yeah, it was spun off from the American Jobs Plan alongside the Infrastructure and Investment in Jobs Act, which was a $3.5 trillion. That's with a T, by the way.
Yep.
Democratic Reconciliation Plan package that included provisions related to climate change and social policy. Now, obviously, these sort of things don't go through as they're intended right away. So there was a series of negotiations, and the price was lowered to approximately $2.2 trillion.
Oh, man,
again,
they
with
cut
a T.
so much.
Look
at all the savings.
That's deflation. That's deflation.
All the savings they saved us.
So the bill was actually passed 220 to 213 by the House of Representatives on November 19th, 2021. So then in December of 2021, again, more negotiations going on, parliamentary procedures. Senator Joe Manchin, he publicly pulled his support for the bill, really due to its cost and that he thought it envisioned a too aggressive transition to clean energy. Obviously, because he lives in West Virginia, and they're the coal mine central of the world.
They like coal.
That was whispering. I hope that comes through. That is kind of, he was doing it for his voting constituents, obviously. So subsequently retracted his support for his own compromise in that legislation. So he was what held up the bill for a long time. So this effectively killed the bill, because the bill, if you look at the Senate, needed 50 senators to pass via reconciliation, and all 50 Republican senators opposed it. So he was the holdout. Some continued negotiations between Joe Manchin and Senate Majority Leader Chuck Schumer over the course of months eventually resulted in even further reduction from $2.2 trillion to $737 billion. That's a big drop.
That is.
In fact, it's like a third. So that became the $737 billion Inflation Reduction Act of 2022. the sudden deal on the Inflation Reduction Act, which was negotiated pretty much in secret. So, like, we were all shocked when it came out.
Yeah.
And announced on July 27th, 2022, was widely regarded as a shocker, as Democrats had voiced that there was little hope for a revival of many of their priorities, in addition to Manchin himself being rather pessimistic on the prospect in public. So, as the revised bill made its way through the chambers of Congress, the new reality of Biden unexpectedly having a clear path to enacting substantial portions of his domestic agenda into law that he had talked about, for years as he was campaigning, led to a wide reevaluation of the success of his presidency thus far, and is expected to give him a party boost while campaigning. So, that is where we are in terms of how the Inflation Reduction Act got to be where it is.
Yeah, so the Build Back Better plan was this big plan. They had tried to get multiple things. They tried to take it all into one, couldn't get it, reduced it down, still couldn't get it, split it apart.
Yep.
And that's where we're at. This
Exactly.
Inflation Reduction Act is a piece of that legislation.
A very, very small piece, actually,
Gotcha.
of the overall original agenda. Let's talk about some provisions.
What's in there?
So there is a lot in here, and if you know how our government specifically likes to make things, they like it is like 800 pages, and things don't all align. They're not all the same. It's not all focused on the same thing.
Yep.
So this is like a compilation of a lot of different things. Obviously, you have to bring money in to pay for things. At least that's the way it traditionally works. So there is a period that's going to raise revenue, right? There's going to be a discussion of raising revenue in this. So number one, over a period of 10 years, the law is estimated to raise revenue from a couple different things. First thing being prescription drug price reform to lower prices, including Medicare negotiation of drug prices for certain drugs, starting at 10 by 2026. So that is going to be $265 billion of extra revenue brought in. So that's contra revenue, I guess that'd be.
Yeah, it's not really revenue.
It's
They're
offsetting.
reducing their
It's offsetting
already
an expense.
baked in expenses.
So it's being portrayed as revenue.
Yeah.
Another one is a selective 15% corporate minimum tax rate for companies with higher than $1 billion in annual financial statement income. That is estimated to bring in $222 billion. Another one is increased tax reinforcement. This one's the sticky one.
Yeah.
So the IRS, not IRA that we're talking about today, the Internal Revenue Service, they are anticipated to bring in about $204 billion. That actually is going to be an increase in audits, essentially, of higher income earners is what's typically being thought of here. But if you look into some of the numbers, it actually could be middle class and above are going to be audited at a higher rate at this point.
Your most efficient way, just looking at this, is you want to audit the people who are higher in income, where they're taking exemptions, things like that, where they could have even honestly made a mistake, not like trying to cheat the system, but they just made a mistake. But they're not in such a high bracket where they have a bunch of attorneys that they can use to fight
There's
the
a
legislation.
sweet spot in there.
It's that in between, because the super high income earners are also the ones that have a whole team of
They can
attorneys on
fight it.
staff that say, I'm not even going to deal with this. You guys take care of it. It's that in between where you say, we're audit you, we're probably going to find some deficiencies, and you're going to just pay because you're not going to want to fight it. That's your sweet spot.
Absolutely. And then another piece of revenue, I guess, would be another $74 billion-ish. I'm going to put ish on all these because who knows? Of a 1% excise tax on stock buybacks. So that would be if, for example, Apple is the buyback king of the world, right? They buy back their shares like crazy. They've bought back tons of shares over the years. Well, they would have to pay a 1% tax on the amount that they buy back, which in theory is an attempt to slightly deter companies from buying back stocks and juicing earnings. But essentially, the math says that it's not going to deter them. It's still more than 1% beneficial to be buying back their own shares. So that is probably what's going to continue to happen at this point. Those are where the revenue is coming in, I guess, or less revenue going out in one case. How is this going to be spent? Is the next question. One is addressing domestic energy security and climate change. So
that's a big piece of the bill.
Well, and energy security has been a huge thing as we've lived through this Russia-Ukraine invasion, and specifically Europe is having a terrible time with energy reliance on Russia. That's been awful and sent prices through the roof. Well,
even coming out of COVID, supply chain disruptions is a problem, right? And we need to make sure we're better prepared for that.
but just making sure that we're as secure in our own energy needs as possible. That's one piece. Now, a lot of that's going to be coming through renewables and things like that, as is made evident by the climate change focus as well. So that's going to be spent of about $369 billion. They anticipate reducing the deficit by $300 billion. That sounds unlikely. And then continuing for 3 more years, the expansion of the Affordable Care Act.
And that's over the
subsidies.
next 10 years. So they're
Correct.
that's nothing for the deficit.
Exactly.
It's not even reducing what we owe. That's reducing how much every year
overspend.
that we're overspending,
Exactly.
which is just, okay.
And then continuing for 3 more years, the expansion of the Affordable Care Act subsidies originally expanded under the American Rescue Plan of 2021. That's going to cost $64 billion. Funding for drought resiliency in Western states, that's about $4 billion, which makes me think, all those Eastern states or Midwestern states, are they getting like unfairly discriminated against? They should get funding for this too.
So
We didn't choose.
I know, and we're in the Midwest, but if you think about where some foods come from, everybody benefits if there's better production, right? You know, those Western states are big exporters of certain crops, right? You think of Idaho potatoes, things like that, that if there was issues there, everybody pays for it. So I'm in the same, like when you hear that, you're like, come on. But then you think about it like, you know what? It makes a lot of sense.
Sidebar, my dad has this theory.
Yes.
Joel Wilson. Joel Stradamus, he calls himself.
Okay.
He's got
thoughts. He
thinks, and I get this thought that, so think about the Midwest where we live right now.
Yep.
We have essentially no natural disasters, no hurricanes, no tsunamis,
Tornadoes.
occasional tornadoes, but they don't really economically.
Minor earthquakes, nothing big.
Yeah, nothing big.
Blizzards.
Occasional.
Yeah.
So anyway, relatively minor on a natural disaster front, right?
Yep. No volcanoes.
No volcanoes. We have an abundance of fresh water.
Oh man,
Clean
we
and
are
fresh water.
the freshwater
Source of the
place.
world.
Yes.
Right?
Besides Lake Erie, it's not really fresh, but it's water.
It's
fresh
water.
is
It's
relative.
technically not salty.
Yeah,
so we're
but
good.
it's not fresh.
But we can clean it. We have plenty.
Yeah.
The Midwest has access to all this stuff, right? The West is dry,
Yep.
has no water, has earthquakes and yada, yada, yada.
Fault line.
The South has hurricanes and
Yeah.
all kinds of stuff. The East Coast
Scorpions.
has hurricanes and all kinds of stuff. Ooh, that's true too. But we don't have any of those issues. This could be the place in 50 or 100 years to be buying up real estate because
This is it.
this is it.
We got. Good
We have it
crop.
all.
We have good soil.
It's great for farming. So this is the place to
This is
be.
it.
The Midwest for
We
life.
chose the best place to live.
We really did. I didn't really choose it, but I'm going to stick with it.
Yep.
Okay, so there's one more source of spending here, and that is increased funding for the IRS. Is going to cost money. Obviously, that's about $80 billion. Now that's offsetting the
200
estimated $204 billion that they'll bring in. Again, that's all estimated.
$80 billion.
Yeah,
That's a lot.
that's kind of where the money's coming in, where it's going. Josh, that's a lot of numbers.
Yep.
Hit me with something funny.
Okay, I got a dad joke. It's more an observation, but a dad observation. The observation.
The observation.
Yes. So I needed to get some cash the other day, so I was in line for the ATM, and the guy in front of me was standing on one foot. And I'm like, what is happening here?
Uh-oh.
He was just checking his balance. See what I
That's
did
an
there?
e-slapper right there.
Yep, that's a good one.
That's a good one right there. Okay, so speaking of ATMs,
Yes.
I think ATMs need to get on board with Apple Pay.
Mm.
I don't want to have to bring my debit card out all the time.
You're at the wrong bank. My bank, I can use my phone to log into my ATM.
Really? What do you use, Chase?
Fifth Third.
Oh, Fifth Third.
Yeah.
Fee Third is what I've heard it's called.
No, it's good. So ATM,
Yeah.
go there. If I don't have my debit card, I have a login on an app, right? And then from the app, I can log into the ATM.
They'll just shoot you all the money you want.
No, it's just the way to log in. Then you use the ATM like you normally do.
Oh.
It's just, if I don't have my card to slide in the ATM slot, I can use my phone to access my account.
I'm so cash light anymore that I rarely go to the ATM. And usually if I get cash, I go straight to the ATM, deposit it. Because in my mind, if I have cash, it's not mine until it's in my bank.
Okay.
Because I just like to see it all in one place. But anyway, my barber, which Kevin does a great job. Let me tell you what. I can't
You
dish
like
your
it.
great clips, but
I got
that straight razor
I need to try it
finish,
sometime.
the
Gotta try
straight
it.
razor finish on the back of your neck.
Oh,
Woo!
that's where it's at.
It's where it's at. So anyway, it just feels old school. He takes cash.
Mm.
And it's like the only thing in my world that's cash only. So now I'm hoarding cash.
Yeah,
Every time
'cause
I
you
get
need
a
it.
20, I'm like, it's going in my work kit bag. So I
It's
can go
going
get
in my
haircut.
hair fund bag.
It's the hair fun bag. Which, we'll probably get less and less use over the years. Right?
For me, it is.
That's right.
They better charge less.
So we couldn't leave this episode without giving what we, believe is happening. Kind of our opinions, and we've probably got some different opinions on this, but that's what this is about.
Yep.
We have got some thoughts. So I'm going to start. So my opinion on the Inflation Reduction Act. The real question in my mind is, does this lower inflation?
Yes.
Because that's what it's titled as, right? So putting some numbers to this, the Nonpartisan Congressional Budget Office estimated that the bill would have no statistically significant effect on inflation.
Yep.
So that means probably not.
Yep.
The Penn-Wharton budget model also estimated that the bill would have no statistically significant impact on inflation. Okay, so it doesn't sound like it's living up to its name. The Tax Foundation, which I will point out, typically is a fiscally pretty conservative think tank in Washington. They stated that the bill may actually worsen inflation by constraining the productive capacity of the economy. It estimated the bill would result in a loss of 30,000 jobs and a 0.1% reduction in GDP, while resulting in $304 billion of additional revenues, which they do anticipate would go towards deficit reduction there. I can't help but thinking about the timing of this, going, middle of 2022, heading into midterms. It seems like a bit of a political play to claim an election promise on a couple things, the climate, things like that, for the Democrats, which needed a little bit of help based on earlier in the year results, what odds were looking like for the election. So it seems like claim a win, get some votes, also claim that you're lowering inflation, but inflation probably won't be impacted by this. Yeah. It just seemed a little bit political to me. That's my opinion. Josh, what are yours?
So my opinion on the name is like they always do. They find a very catchy name that they can sell.
It's already used.
I know the IRA acronym is horrible.
Come
but
on.
Inflation Reduction Act. What is everybody paying attention to this year? Inflation.
Yeah.
So I get it. That's what they always do, is find some catchy name because they're selling it to the public.
Yep.
When I look at the actual bill itself, and my opinion is there's some pieces in there that I think are healthy and good and beneficial, like prescription price reduction. Like there's some reform that needs to be done in there.
Yep.
And I think, will this help? Hopefully, I don't know, but that progress that direction is good. Tax enforcement, new IRS. If you've ever tried to call the IRS, you can't get hold of anybody.
No.
So I do think there's more people there. Now, I get from a revenue standpoint, you need to focus on audits, but
start with customer service.
Well, there's also other things you can do to probably optimize the IRS. They got some outdated tax stuff. They have some outdated websites, software. They can become more efficient.
Or, my goodness, let's have a straight, easy tax code.
Yeah, I mean, that's a whole nother issue, right? So I get that too. Deficit reduction, not happening.
No.
I guess my biggest complaint, and it's not just this bill, but across the board, is they project these on a 10-year. Like, that's what we were talking about, right? 10 years from now, they use that, right? Or we'll save this amount in 10 years. So if you go back to 2012, 10 years ago,
yep,
and if they're putting together their budget, I mean, there's no way they're still following the things they had projected then.
No.
Like 10 years just doesn't make sense to me. So I have a hard time believing that this bill will do everything it says it's going to do from a cost expense standpoint. So that leaves me to feel like it's actually not going to be as rosy as they're painting the picture, which means it'll probably impact inflation long term, just because they're spending more.
Well, and the leadership that put this together,
they're not going to be there.
They're not even going to be there.
Yeah, 10 years.
So that's kind of tough.
Yeah. So overall, when I look at this, there's some like drought resiliency for the Western states. That's important. I mean, just we talked about it. Like there's things that they produce there that everybody in the United States needs and globally exports that is beneficial overall.
Potatoes and wine.
There's good things in there in this bill, but again, like all bills that seem to be coming out now, they're very weighted with extra stuff stuffed in there, right?
Yeah.
$737 billion or whatever you said. That's a big number. And I'm assuming there's a lot of fluff in there that could have been maybe better adjusted if they were really concerned about those high points. But overall, there's good pieces in there. There's a lot of significant stuff that could have been left out or adjusted. But I think in the end, this is things that the Democrats were trying to get done, and they did. So, that they needed to do it before the midterm elections.
They saw an opportunity.
They needed to. So
they took it.
Yeah. As well, they had the majority in both spots. This is probably their best chance.
Absolutely.
So, yeah.
Well, that is the Inflation Reduction Act. But thank you for listening to this episode. Please remember to follow us on social media. We're on Instagram, Facebook, Twitter, wherever you want to follow us. And also, if you know someone asking about the Inflation Reduction Act, share this episode with them.
Ask them why, and then share this episode with them.
This may hopefully provide some help and some knowledge around that for them. And then, as always, email us any ideas to hello@theinvesteddads.com. Well, until next Thursday, have a great week.
Talk to you later.
Bye.
Thank you for listening to the Invested Dads podcast. This episode has ended, but your journey towards a better financial future doesn't have to. Head over to theinvesteddads.com to access all the links and resources mentioned in today's show. If you enjoyed this episode and we had a positive impact on your life, leave us a review, click subscribe, and don't miss the next episode. Josh Robb and Austin Wilson work for Hicks & Zerker Capital Management. All opinions expressed by Josh, Austin, or any podcast guests are solely their own opinions and do not reflect the opinions of Hicks & Zerker Capital Management. This podcast is for informational purposes only and should not be relied upon for investment decisions. Clients of Hicks & Zerker Capital Management may maintain positions in the securities discussed in this podcast. There is no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Past performance may not be indicative of future results. Indices are not available for direct investment. Any investor who attempts to mimic the performance of an index would incur fees and expenses which would reduce returns. Securities investing involves risk, including the potential for loss of principal. There is no assurance that any investment plan or strategy will be successful.